do that now. So for the folks that recorded, we just got an intro from Cameron, a land acknowledgement of the stewardship of Native peoples on the land that we are calling in from, and just talked a little bit about the mission. So our short little recording recap. But for those of you who don't know me, I'm Mika Fisher. I'm the managing director here at NC3. And today, thank you so much for joining Community Capital 101, the first webinar in our Community Capital Summer Series. And today we'll be talking mostly about a tool called Community Capital Toolbox. So, Community Capital Toolbox, it is a new tool provided by NC3. It's available online at our website, nc3now.org. And John will also post the link to that. Thanks, John. And just some context, the idea for this tool came out of a listening tour that actually a lot of you participated in. And I heard a lot from early stage groups who were really excited about the concept of community capital because they saw the power of, or the potential power of democratizing capital in their neighborhood. And they also saw a lot of the problems that our current capital economy has created. And I'm going to be referencing these throughout the presentation. So I just wanted to take note that there are a very small group of people who are able to invest their money, while many people are either disincentivized or not able to do a lot of investments. And right now, the investor class in the US is wealthy, and it's disproportionately white and male. So just one piece of data to add context to that, in a 2017 Wharton study, they found that 87.6% of angel investors in the US were white, and 78% were men. So really terrible lack of diversity for folks who are making these big investments. And this lack of diversity in the investing class means that who and what projects currently receive investment is really often limited to a particular set of tastes and perspectives. So a lot of the groups that I spoke to during this listening tour saw this, and they wanted to make a change starting at home. But often they didn't know where to start. They had ideas, but they weren't sure what mechanism for community capital was the right fit for their circumstances. So that's how this came to be. I want to note that, as Cameron mentioned, we have defined community capital as a set of strategies that allow people of any economic status to invest in their community. So we say it's a set of strategies because there's a lot of different tools within our toolbox, quote unquote, to make that happen. And even more tools would be possible with better regulations and legislation around investment, which is also something that NC3 works on, just as a side note. But community capital is a concept that's adaptable to the needs and resources within a community. And we at NC3 are not here to prescribe how to do community capital. Really, we want to provide guidance on all the ways that you can practice it and try to figure out what's the best fit for your community. However, we do want to point out some similarities that we like to see in community capital projects. And to that end, we've developed the community capital principles. So the community capital principles are online. You can read them in depth. Once again, John will post the link to that on our website. But I do want to give an overview now to put the toolbox into context with what we're talking about. So principle one is that community capital is inclusive. It means that there are opportunities for people of all levels of wealth and all demographics to invest. So there are multiple ways this shows up, but one way that this shows up in practice that I'll be referencing is including non-accredited or retail investors in capital raises. So non-accredited investors make up an estimated 95% of the US population. In contrast, accredited investors, if you're unfamiliar with that term, that means someone with an annual income exceeding $200,000, or they have over $1 million in assets, not included in primary residence. So you can tell that's a very wealthy and small subset of the country. We want to help projects widen their investor pool past this small accredited definition. So this, along with other practices for inclusivity, can create opportunities for more diverse stakeholders, both to receive investment and to build wealth through investment. So that's really core to what we're talking about. Principle 2 is that community capital is fair and equitable. So community capital creates meaningful returns for everyone, not just the wealthy. Right now, something you'll typically see is that investment opportunities provide the highest rate of return for the wealthiest investors. And this just rapidly increases their wealth. So the non-wealthy have often been limited to investments with relatively low and risk-adjusted returns, which discourages non-wealthy people from even trying investing. And what we want to see instead is in a community capital raise, the rate of return should never be lower just because it is putting in less money. And in some projects, we also love to see that the rate of return is being adjusted for this kind of wealth disparity, and the rate of return is actually higher for people who are putting in less money for non-wealthy investors. Principle 3 is that community capital empowers and serves all stakeholders. So these raises incorporate their perspectives and interests of a diverse set of local stakeholders in their design and sometimes in their management. So development projects right now, most of the time, they're designed and governed by wealthy investors, investment managers, or other gatekeepers. And those people are primarily interested in financial returns. So what we want to see in contrast is projects that intentionally balance the needs of many stakeholders and ensure that, principally that no one is harmed by the ventures activities. And finally, in principle 4, community capital facilitates shared prosperity. This is kind of a big picture principle. It's what we want to see ultimately. It's a capital market that effectively balances the needs of all constituents, and that ends up creating resilient, thriving, local, equitable, sustainable economies. So getting into the toolbox, with that kind of understanding of our principles, we can better understand how the pieces of the toolbox look in practice. And I just want to give some background on how to read this guide because you can dive into it later. There's 2 sections. One is for community builders, it could be a person or a group of people that want to create more opportunities for community capital in their hometown or in their region. And the other section is for businesses or development projects that want to raise capital from their community or from their customers. So the other thing to note with this toolbox is that I've included an input meter. So this is a 1 through 10 rough indicator of the time and resources that each strategy takes. And for monetary resources, that often means legal and marketing fees. So this is to help you realistically strategize what you are able to take on when you're trying to practice community capital. And finally, I just want to say that this is a living document. We will be making changes from time to time, so feel free to check back. And there's also room for feedback at the end of the form. We know that you all are out there practicing community capital. And if there's something that's worked really well in your community that you think other people should know about, let us know and we can add it. So up next, I'm just going to give an overview of each tool, and then we'll move on to the very exciting part, which is hearing from our guest presenters who are really doing this in practice, and we can get inspired by them. So community builders, this is the set of tools for folks who want to increase community capital projects in their region. The first tool is investment clubs and networks. These are groups of investors who come together to learn and sometimes make local investing decisions together. I want to point out that there's a pretty strong legal distinction between clubs and networks. So our guide goes into more depth about that, but we're also going to hear from a club later. So that'll give a lot of context to this one. The next tool is democratic microgranting. This is a tool that one of our board members has used to inspire and get her community thinking about making financial decisions together collectively. I do want to note that it's not technically an investment because you're not expecting a return on the money that you put in. But we do like to talk about this tool as like one community building step on the way to investment. And this is simply neighbors who pool small donations and they vote to allocate grants to local projects. And there's a few links to a Detroit soup program that's done this in the toolkit. are in the toolbox. The next tool is local investment web portals. These are websites or online communities that aggregate community capital investing opportunities. This is a really big bucket tool. I've included a lot of different examples in our toolbox online about this. It can range really in how it looks, and we'll have an example later on. But I do want to note that this is not a regulated crowdfunding portal. That is a separate idea. However, these do often link out to already established regulated crowdfunding portals. And then finally, community investment funds. We talk about these a lot at NC3. We're passionate about them, and we have a series of tools to help you start one. And overall, these are professionally managed funds that honor the principles of community capital that we talked about. So finally, the second section is the toolbox for businesses. This is kind of a different lens than if you're just a community member who wants to increase this ecosystem. So the first tool here is rewards crowdfunding. Once again, this is not technically an investment because you don't expect a monetary return, but it's a good stepping stone to kind of build your muscle for getting community support. These are donations from individuals in return for a product or service. And a lot of people are familiar through sites like Indiegogo or Kickstarter, but there are other platforms out there. The next one is investment crowdfunding. A lot of people come to us because of this. You might also have heard it referred to as Regulation CF or Reg CF. This is a securities offering. It is an investment, and it's open to any investor through a regulated online platform that I referenced earlier. The next tool is really a broad umbrella term for a few different types of securities offerings or investments. These are all summarized in the toolbox. It's pretty technical, so I'm not going to bore you with it right now. But if you're looking to raise money through a DPO, it's a really great place to get a summary of your options. But the main point here is that DPOs can do direct advertising, and they don't require a portal or intermediary like a regulation crowdfunding site. And finally, there's the option of applying to a community investment fund. So this is an indirect way of soliciting community investment. But if there is a CIF near you that has accepted retail investors, so community investors, you could apply for a loan, or they might do equity investments. And from there, you'll be indirectly supported by your community. So that's a great option to look for ways to get supported by your community, but often to have more equitable loan terms, which we're definitely going to hear about through Real People's Fund at the end of this. So I'm going to stop talking and pass it on to some others. We're going to talk about the toolbox in action. So our presenters today, a really incredible panel, they're going to explore what these tools look like in real life. We're going to hear from the series of presenters, and then we're going to have room for Q&A at the end. So your questions can be answered then. And the first tool that we're going to explore is investment crowdfunding. So I'm going to introduce to Pilton Gomez of Honeycomb Credit, which is a loan crowdfunding platform that allows small businesses to borrow directly from their customers and community. And we really like Honeycomb's focus on broader community engagement and deep regional partnerships. So take it away, TP, and I can move on to the next slide when you want.
Awesome. Hello, everyone. Can you all hear me okay? Yes, thumbs up?
Yes, you're good.
Great. I'm sorry I'm calling in from my phone. My internet connection decided to die out, but we roll with the punches. So let's talk a little bit about Honeycomb Credit. Could we go on to the next slide? So our mission is to unlock growth opportunities for small businesses to build vibrant, financially empowered communities. So we are a funding portal, like Mika talked about. Could we go on to the next slide? And as Mika talked about, there's different types of crowdfunding. There's rewards, there's equity. Honeycomb focuses specifically on debt. So we are focused on helping small brick and mortar businesses access loans from their community. So we get a lot of people to crowdfund a loan, and then that business owner goes on and executes on their growth project and pays their community investors over time. Could we go on to the next slide? That next for that. And the whole idea, go on to the next. And the whole idea is that it is better for a local business to pay back Main Street, not Wall Street. I am in a room full of community capital folks, so I think we all agree with the power of this sentiment, not just in building local community wealth, but in helping entrepreneurs connect to supportive people in their community that can unlock all sorts of opportunities from them, from repeat business all the way up to connections that might be beneficial, like, for example, a lawyer relationship or an accounting relationship or a new vendor relationship. That is the power of community capital, and we try to realize that. Can we go on to the next? So here is how our portal works. We work with a very specific subset of businesses. So we're looking for businesses that are looking to borrow anywhere from $25,000 up to $500,000. And these loans that they're taking on, they're a 3 to 5 year term loan that they're borrowing at 5% interest on the low end and 12% interest on the high end. So unlike many platforms, Honeycomb actually takes the time to price offerings according to risk. So if it's a really early stage business with not a lot of proof of concept, that might be a more expensive loan. If it's a multi-location business looking to expand, that might be a lower interest loan. What we're trying to do is we're trying to be kind of like the source of equilibrium for community investors. We want them to make a return and continue to use their investing dollars in these offerings. But we also want to make sure that entrepreneurs are accessing fair capital and not paying an exorbitantly high cost to borrow from the community. So we're balancing those two things out. Could we go on to the next? And this is not a foreign, faraway concept. We've done this over 200 times now, deploying over $12.5 million of retail investor capital to hundreds of businesses across 26 states. So this local investing movement in small businesses has become real over the past 5 years that RegCF has had time to mature and develop. We've gone to the next. Here's a little bit about the process. So when we are working with a business owner, we're asking them to submit an application. And we're taking a look at very similar things that a CDFI or a community bank might be looking at. We're taking a look at financial statements, if they have them. We're also able to work with startup businesses. Personal credit plays a factor as well, a personal financial statement. And then we work with that business owner to create a term sheet that works both for them and for the community of investors. We then pair them up with a campaign coach that helps them organize a video shoot that is free, organize product photography, and give them week-by-week instruction on how to run an effective crowdfunding campaign. 83% of Honeycomb campaigns reach their minimum funding goal, and the average Honeycomb campaign is about $65,000. So for a brick and mortar small business, this is a substantial sum of capital coming from their community investors. Most businesses get a 30-day no payment period, and then the fund starts. Then they start executing on their growth project and paying back their community. We go on to the next. Yep, as I said, we pair our business owners up with a campaign coach, and we guide them through the process. There's no, we've created a really easy templated way to launch these loan crowdfunding campaigns, where the businesses we work with don't have to take on the big legal costs that might come with an equity crowdfunding campaign. It's all pretty simple. Honeycomb gets paid with a $250 fee if you want to launch on the platform. And then, like any platform, we take a closing cost if you successfully raise what you're hoping to raise. That closing cost can range from 6% up to 8%. And the more you raise, the closer it gets to 6%. We got to the next. But that's not all. One thing that sets Honeycomb apart is that we really focus on building local, geographically oriented communities of businesses launching crowdfunding campaigns. It's one thing to launch a crowdfunding campaign in Boise, Idaho, and then another one in Baltimore. But we think that the magic really happens when you have multiple campaigns launching in one place, multiple investors having many investment opportunities in their geography, counties, town, neighborhood. And we have found that foundations have increasingly come to agree with that philosophy. So we've started to actually onboard foundations that are now lending on the Honeycomb platform to invest in the communities that they want to support. So for example, the Souls Grown Deep Foundation is lending $10,000 as soon as a Black-owned business based in the South launches a Honeycomb campaign. The Jesse Ball DuPont Fund is lending anywhere between $10,000 and $20,000 to any business in Jacksonville that launches a Honeycomb campaign. And this is just the beginning. We see Honeycomb as a place where eventually CDFIs and other community investment funds can start lending in a very easy and streamlined way. Can we go on to the next? So this is an example of a loan participation fund that we set up. This is the Souls Grown Deep Foundation. They are lending $10,000 in every Black-owned business that launches a Honeycomb campaign, so long as they're based in the South. And this has been transformative. Much of the work that comes with crowdfunding takes a lot of risk on the part of the entrepreneur. What we want to do is increasingly connect entrepreneurs to friendly sources of capital that can help make this process a lot easier and help encourage other folks in their community to also invest in them. So that's the work of Honeycomb. Can we go on to the next slide? So here are the things that you can do. We are in market. We are ready to launch a Honeycomb campaign anywhere in the US. So number one, I'd love to hear about your vision for community capital. Add me on LinkedIn and let's set up a time to chat. We are actively searching for new markets and want to find alliances that can help us connect the dots and be additive to local ecosystems. Two, shout out your favorite small business. I'm taking notes on who you all have listed. We will reach out to them. We have built a really robust sales and marketing acquisition engine where we are pretty good at consistently sourcing businesses in a given community once we prioritize that geography. Or three, shout us out to your favorite foundation, or if you're a CDFI, let's talk about how we can work together to start deploying more capital and get retail investors involved. That's it for me. Thank you all.
Thanks so much, TP. We really appreciate hearing about Honeycomb Credit's ecosystem approach to what we're doing here. It really aligns with NC3. So the next tool I'm going to share is investment web portals, that kind of big picture tool that I mentioned in the community builder side of things. So once again, this is different from a regulated crowdfunding platform like Honeycomb Credit. These are online communities that are helping educate and direct investment to a particular community, and that could be regional or demographic. So I'm here to introduce Cherie Warwick from the 10K project. It's really an amazing project that is building an ecosystem where everyday people can invest in Black-owned businesses. And they're also building a ton of important educational resources. So I'm going to pass it off to you, Cherie.
Thank you. And oh boy, TP really started off with a big bang. So thank you to him. So the 10K project is the largest community of investors who actively fund Black-owned businesses. And I started it along with my co-founder out of frustration. I am a business plan writer. I've been one for 12 years now, full time. And I would write these business plans for all sorts of companies, people of different ethnicities, et cetera, all sorts of businesses, et cetera. And my Black founders were having trouble getting the funding that they were looking for. But within the Black community, we don't have a lot of accredited investors, but we have a lot of everyday average people who, if they knew that a business was raising money and they were able to hear what the pitch was, then they would be willing to put in $100, $200, $300, et cetera, in order to help fund that business. And that is what the 10K project is. It again came out of my frustration. I said, hey, everybody, let's get together and let's become this community of investors. So one of the interesting things that happens in equity crowdfunding or any kind of crowdfunding is that you have these different portals, but unless you go to each of the portals, you really cannot easily identify like the companies that you want to invest in based on whatever your social mission is. And for us, it is investing in Black businesses. So we have instead become the curator of the Black businesses that are on equity crowdfunding portals. And the way that we do that is through something called a Bet on Black pitch. So every Tuesday at 8 p.m. Eastern time, we host a Black entrepreneur who is raising funds through equity crowdfunding. They come, they present their business to us, and then our community has the opportunity to ask that business owner questions. And then each individual gets to decide if they want to invest in that business, and they go directly to the crowdfunding portal in order to do the investment. So we're not a fund. We just bring together the crowd of people who are interested in investing in Black businesses and the Black entrepreneurs that are looking for the crowds. So we bring those people together. We marry the two. So there are a couple of different ways that people can get involved, or you can learn our methodology. Maybe there's another community that you want to serve with this. But number one is you could be an investor. If you want to invest in Black businesses, you do not have to be Black in order to join the 10K project. But if you feel like, hey, I want to learn more, I want to start coming to the Bet on Black pitches, or I want to support some of the campaigns, then it's the10kproject.com. And I'm going to stick it really quickly in the, what do you call it? Sorry, in the chat here. The10kproject.com is our website. And then also we have just launched a course as well for people who want to learn, entrepreneurs who want to learn how to do equity crowdfunding from A to Z, all the way from, I think I want to do it, to I've got to finish a successful campaign. And that website is roadtocrowdfunding.com. And Mika put that in there for me as well. Thank you so much. So I don't know, Mika, if there were other things you wanted me to discuss, or if that's it.
That's perfect. Thank you so much, Ree. And I'm sure there'll be some questions for you at the end. Yeah, so I also want to shout out that on that new project, roadtocrowdfunding.com, one of our board members, Bill Houston, was one of the educators for that. And we really appreciate his expertise, both at NC3 and for the 10K project. So next up, I'm going to introduce Paul Bindle to talk about the tool that I mentioned at the very beginning, which is the investment club tool. So many of you might be familiar with this idea. We want to highlight an example of a club that really is embodying the principles of community capital. So Paul is going to talk about the Colorado Solidarity Fund, and I do have some slides for you, Paul. Hold on.
Thank you all for having me. It's good to be here. We'll wait. I guess the slides are coming up. I'm one of the co-founders of this club.
I might have to reshare my screen 1 second. Did that work?
It's coming. It's coming. It's coming.
Great.
It's saying loading. Yeah. So Colorado Solidarity Fund is a investment club that is focused in Colorado and businesses that are based in Colorado. We have 63 members, and we each contribute between $20 and $350 a month to a common pot, and then we make decisions together about how to invest it. So this is a different kind of tool. I was telling Mika about it. Unlike some of the regulation CF, and obviously community investment funds and direct public offerings, this is a more grassroots approach, and that's what really resonated with us, is we wanted a nimble tool that was able to we were able to respond to the needs of our communities in Colorado. So our members, range the gamut. There are lawyers in our group, and then there are teachers, there are caterers, huge class differences. We also are bilingual, so we have Spanish speakers and English speakers in our group. And our values that we're really committed to are collective power, equity, community, and inclusivity. And that plays out in our investments. Can we go to the next slide? So as I mentioned, we have 63 members. Those are the counties we're in. You can see we're still largely based in Metro Denver, so there's some need for greater outreach throughout the state. Our focus is really on worker cooperatives. So our focus is the solidarity economy. We want to see different kinds of businesses emerge in our state that specifically distribute wealth and power in more equitable ways. And for us, a worker cooperative is one of those really great tools that allows all of the workers to be owners if they so choose, and to take on an ownership position and purchase a share within the company so that they can benefit from any profits the company makes, as well as so they can participate in the strategic decision making of the company. We've also invested in housing cooperatives, which allow more people to access housing. Our region is really beset by inaffordability. And so it's a huge problem for us that we're hoping that our investment club can solve. And to that end, we're even considering creating a spin-off club that would be focused on just real estate. Yeah, if we could go ahead. So a little bit more, the owners and operators in our portfolio, you can see that just under 50%, 46% are people of color led. We also have, I guess, just over 60% that are women led. And we can keep going. We've heard from different people that, they've been able to hire new staff as a result of our loans. So I would say that we'll see this in an upcoming slide, but the majority of our products have been loans. And we've done all the underwriting ourselves. It's all a volunteer act of love. So it's very much a learning space. That's why we emphasize, education among our members as part of our purpose. We created a COVID pivot loan in the middle of COVID to give microloans of $2,000 to $5,000 to entrepreneurs that were basically unable to access different PPP and federal funding. And so that primarily was entrepreneurs of color. We had one DACA recipient who applied and was able to grow his business. And so there's just really cool to see, even though we're not the largest fund, I would say our members contribute about $2,500 a month. So on average, there are some annual participants as well. So on average, we're like raising about $50,000 a year collectively. So we're not a huge fund by any means, but we're able to do things that are really targeted and specific. Can we go to the next slide? So here's a little glimpse of our portfolio. You can see that just over half of our invested funds are loans. And we also have some, probably 40% that is equity. And these are in different investment funds like Kachwa Impact Fund, which is a cooperative fund. We also invested in a bookstore that's in a rural community. We invested in the Main Street Phoenix worker co-op that is purchasing restaurants that are struggling throughout COVID and turning them into worker-owned businesses. And so, and as well as you can see a lot of our micro loans that we made to entrepreneurs throughout COVID. So yeah, we've invested just over $100,000 in the 3 years that we've been around, and we're excited to keep on going. I think that, is there one more slide or no? Okay, that's it. So yeah.
Great. Thank you so much, Paul. Everyone who knows me knows that I am a huge co-op fan, so I was especially excited to show something that kind of combines the community capital and cooperative movements together. So
I also wanted to say our target return is 2 to 6%, and so we think of ourselves as somewhat concessionary or patient capital, and so we've had groups come to us that, like Convivio Cafe, they were working with the CDFI that was charging them 12% for their startup. And so we basically came in with a small loan and added that to their capital stack at a much lower rate. than 12.
Yeah,
So
absolutely.
that's part of the flexibility.
Thanks so much, Paul. That really is a great segue into the final tool that we're going to highlight today, which is the Community Investment Fund. So as I've said, we talk a lot about these, but we love to highlight community investment funds that are democratically governed and specifically working to address historic disinvestment from communities of color. And that's something we really want to emphasize about the potential of community capital. So to do so, I'm going to introduce Tashwin and Lorica Harris-Kay from the Real People's Fund. And we've got some slides for you as well. There you go.
Awesome. Hey, everybody. It's so cool to be in this space and learning from what really rad other groups are doing across the country. My name is Tash, and that is Lorica down there. And we are calling in from occupied Ohlone land in Oakland, California. And yeah, so my name is Tash. I work at Restore Oakland. I'm a formerly incarcerated community organizer who is now the board chair of this community controlled capital fund, which is kind of crazy. Yeah, what the Real People's Fund stands for Revolutionizing Our Economy for All Local Peoples. And we are a democratically controlled fund and program for BIPOC entrepreneurs and small businesses in the East Bay. And so our goal is to build economic and political power while also providing expanding opportunity for Black, Indigenous, and entrepreneurs of color. And so we do that. And so these are the groups of people these are the organizations that govern this fund. It includes organizations that work for Asian Pacific Islander empowerment, organizations working on just transition, organizations working on equitable housing development, tenants' rights, restaurant rights. I work on healing justice. And we partner with Runway, where Lorica works, and Optima, and they provide culturally relevant and holistic support to small businesses to make sure we set folks up for success. We are partnered by a foundation, the East Bay Community Foundation, who helps us do fundraising. And we work with Community Vision. They are a CDFI who helps us administer the loans. And we are completely democratically governed. So this means that this group of people that you see here, these organizations, are the board. We make decisions. We also have committees that we work on outside of our board meetings to kind of keep the work moving. So we've got a fundraising committee. We have a mission criteria committee that identifies what the business's impacts objectives are and assesses values alignment. We have a committee that's just focused on political empowerment and political education. We have credit committees that are reflective of people in our community. And we really work on a each one teach one kind of value orientation. So we teach each other about how we want to be governing, and we really move at the speed of trust. Next slide. Cool. So this is kind of how we work. We are more than just a fund. We are a program. And we know that, in addition to providing accessible capital, we also have to set folks up for success by offering free business advising, technical assistance, and support that Lorica and our folks at Optima help provide. And then we know that in order for businesses to organize, they have to have the time and resources to learn and to do it, and they want to do it. And so we create space support circles, offer folks to share their pain points, what they're struggling with, and also teach them about what's going on politically. And we believe that these three things equal what community self-determination looks like collectively and together. Next slide. And so here is an example of a campaign that we are working on. So just last week, we just won unanimous approval from the Oakland City Council to place a ballot initiative onto the November ballot that would eliminate Oakland's flat business tax. So currently, giant corporations here like Clorox pay the same business tax as a mom and pop business down the street. And so by implementing a progressive business tax, we would be able to bring in more city revenue that would then help small businesses thrive. So this is how we kind of use our resources to be able to create larger ripple effects that address systemic failures. And I'll pass it to Lorica. for the next slide.
Thanks, Tash. Hi, everyone. So just to say a little bit more about our program, Real People's Fund, like Tash mentioned, is combining non-extractive, patient, flexible, and affordable capital, really with a human and character and relationship-centered approach to lending, as well as the wraparound services that Tash touched on too. So the eligibility criteria on the right are really just like an example, one example of our philosophy and practice. So rather than relying on some of the traditional bank markers of credit worthiness, like credit scores, requiring personal collateral from entrepreneurs, long business operating histories, excluding folks returning citizens or folks who may not, be the same immigration status. Instead, we really rely on the forecasting and the business planning and the projections that the entrepreneurs are doing in collaboration with their business advisor and support. So that's just one example of kind of the way that we move. We really center the needs of the community and the relationship in every part of our process. And we'll go to the next slide. Yeah, so this is just a summary of our loan terms. I won't read through all of it, but we're basically doing small business loans from 10,000 all the way up to 250K at 5 to 7 year terms, 3 to 4% low or no fee, and providing entrepreneurs with 1 or 2 years of interest only, where they're only repaying those small interest amounts before there's a step up. And on the right column, we also are able to offer some revenue participation financing, which is sort of like an alternative to equity for the larger businesses that we serve, without having to give up those ownership stakes. And we don't have a slide about it, but the last thing I'll say too is that we are planning to do a DPO, a direct public offering, which was mentioned earlier, in the future, as well as being open to accredited investors. And yeah, we don't have a slide on those terms, but basically we are looking at the DPO, so the community investments being having the best return rates, so getting higher percentage rates than what the accredited investors are getting at shorter terms, and being super senior. So that means that the community members who are investing would get paid first, would get the highest interest rates and the shortest terms, and the wealthy folks who are investing would sort of come on behind them. Yeah, we'll leave it there. I think there's one more slide for contacting us. Yeah, and we would love to get in touch with you if you are also doing community capital vehicles, if you're an entrepreneur or know entrepreneurs in the California, San Francisco East Bay, or for other folks who are interested in maybe investing or learning more. Thanks.
Thank you so much. I'm going to stop sharing because we're actually going to move into a Q&A section. So I think that there's been some questions in the chat already that Cameron has been collecting.
Yeah, we've got two. There are lots of comments about, gratitude and praise and love sharing. So it's been really great to see. The first question is from Kent Glenzer for TP. The question is, I wonder if there were one macroeconomic or macro political change that would support you, what might that be? And Kent, feel free to unmute yourself and elaborate on that if you'd like.
Yeah, there's two things. I can't pick between one or the other. Number one, I think investing in that grassroots technical assistance is critical. There's a ton of entrepreneurs out there that we cannot work with because they don't have their books in order, or they might not be compliant with like the municipal tax authority. There are so many people who cannot climb this ladder because we have not created the capillaries to provide them kind of like the most fundamental business services at the grassroots level. So I think making those critical investments gives more entrepreneurs a chance to climb that ladder. The other part would be, we are currently subsidizing a lot of financial activity, such as like SBA lending, but that is increasingly going to larger and larger businesses. So I would love to see an SBA for community capital projects, like an SBA for Runway's work, or like an SBA for Honeycomb's work. It would be great if the same guarantees we offer banks, we can offer to community-driven financial institutions and retail investors.
Great, thank you. And the other question was also from Kent. This one is for Tosh and Marika. And Kent wants to learn more about or hear more about the community capital box and the link to the larger power systems. Again, Kent, feel free to
Yeah,
unmute
well,
yourself to elaborate.
Yeah, I will unmute myself for this one. Hi, everybody. I mean, it just seems to me like from listening to your short presentation, you've really, and I'm not saying other people haven't done this, but you're really taking an ecosystem approach to changing power structures and so on and so forth. And I just want to give you an opportunity to talk more about, you know, sort of the transaction costs of that, not from an economic standpoint, but I mean, how have you done this? Because it sounds really, really impressive, but it's got to be really, really hard. So that's my question.
Yeah, I can. So I put it in the chat briefly, but we are raising also grant capital. So we're a $10 million fund and we're raising about an equal amount of grant capital. And so a lot of our funding does come from accredited investors, wealthy folks in the East Bay, right? And that's intentional, right? Like we don't see, some people are like, oh, like shouldn't it be self-sustaining? And we're like, well, actually, it's going to require a range of types of capital to be invested into communities because this is ultimately reparations work, right? This is reparative work. And not all that money should be people getting a return or even getting their money back. A lot of it is going to require grant capital, right? So that's partly from an economic perspective how we are able to fund that. And then, you know, I think your question sort of got at, it takes a lot of time, it takes a lot of resources, it takes a lot of people to do community governance, right? So the way that the pacing and the planning moves is just completely different from, you know, how kind of other models work and what that investment is. Yeah, Tash, feel free to add anything else there.
Yeah, I would just say, you know, how integral, you know, what kind of like that grant funding looks like from a grassroots approach. You know, we know that, you know, small businesses, we have to meet them where they're at. And so that takes time for us to learn what their needs are, design programs that are accessible to them, pay staff who can, you know, do street outreach, talk to them, follow up with them, educate them about who their city council members are, right? So there's a whole other side to our program that, yeah, I think just takes a lot of time and takes a lot of people and coordination and also building alignment within our own team to build that fluency around, you know, me learning about finance and Larica learning about the political landscape.
So those were all the questions in the chat prior to when we started the Q&A section. But Chris Miller, our board chair, asked a question in the chat, which is, what can NC3 do to help all of our presenters in their good work? So maybe not just NC3 as our, you know, in our board, but maybe the NC3 community as a whole. And I think that's open to all of our presenters. And Chris, if you want to elaborate too. Sorry, go ahead.
I'll go first. I think one of the big things for all of us would be to spread the word about what we're doing. You know, whenever you are having conversations with people, then spreading the word. Another thing for us is we're always looking for speaking opportunities, especially in front of either accredited investors who would be interested in supporting, or accredited and unaccredited investors who would be interested in supporting our entrepreneurs, as well as Black organizations, churches, things like that. You know, you email us and we'll take it from there. So those are the two big things that I can personally think of.
Thank you.
I think the toolkit is a great first step, and I'm excited for people to access that. We tried to share some of our resources that we created in the process of forming our investment club, recognizing that there's a range. Obviously, like the People's Fund is doing amazing work and we're doing all this volunteer. And so there's all these different ranges of people trying to create these systems. So the more resources that you can have for people to start or access like an entry point, I think the better.
Great. Wow, that is a good segue into the, unless actually, are there any final questions? I want to leave, we do have time for that, so I want to leave space. Okay. Great. So that's a perfect segue into what's happening for the future for NC3. First, I want to thank you all so much for joining, and for the presenters. It's like such an incredible range of work that you all are doing, and I'm really happy that you're all able to be here and represent that. And we are holding a follow-up webinar / discussion space to discuss what we learned here, because there's so much information, so many different projects, and we know applying this to your own community will take some thought. So there is another webinar coming up in 2 weeks. It's going to be kind of a digestion space. So John will post the link for that, the Zoom registration link. And we also have a survey. So we would love if you would be able to fill out this survey. It's got some feedback for the webinar and also some demographic information so we can assess our impact. The last thing I'll note is that on the next webinar, we will have a bunch of board members there who have experience in helping set up community capital projects, and they can help answer some questions. So thank you all so much for joining, and I'll give you 4 minutes of your day back.
Thank you, Mika. Thanks, everybody.
Thank you.
Thanks, everyone.
Thanks, everyone.
Bye.